Hello and welcome to this week's Trade of the week starting Monday, the 4th of July. Today is Independence Day in the United States, and therefore European markets are very likely to trade in very little volume, both on the equity side but also on the FX side. But let's have a look at last week's Trade of the Week, and that was to go long the UK bank Barclays at 160 pence, and this was following last Friday's piercing pattern to the upside. And on the following Monday, we had a buy signal at 160 pence with a stop loss at 153 pence. And we were hoping to take out this previous resistance at 163 pence, which was the mid-June high. But unfortunately, we only tested it and then failed there and came all the way back off again and were stopped out with a 7 pence loss, or around a 4% loss on this trade. But that's why we have stop losses in place, so that our losses are smaller than our potential gains on average. So let's have a look at this week's Trade of the Week, and it is to go long the British pound against the Japanese yen. From a fundamental point of view, it has to do with the fact that we expect the Bank of England to continue to rise rates, whereas the Bank of Japan is still sticking to its very dovish stance. And from a technical point of view, it looks as if we are part of a fourth wave correction at the moment in terms of Elliott waves, and this should be followed by a fifth wave to the upside. And therefore, we believe that we are in a process of trying to retest the highs we saw recently. So today's trade of the week is to go long the British pound against the Japanese yen at current levels at 163.85 with a stop loss at 161.55 and a target of 169.